Hi, this is Mike Palmer with Group 1 Trading. This is Volatility 4-in-1. After a turbulent end of August, we've actually seen the market rally quite a bit as we've started the new month of September. And accordingly, we've seen the VIX pull back quite a bit. We're actually seeing the VIX below 16 at this point. Now, what we see when we go into these lower volatility environments, we see a number of trades that kind of come out of the marketplace. And that is what you would see if you have a big market rally and a VIX sell-off. And that is they sell sort of at the money options, and then they buy some of those what are now cheaper upside calls. Usually that comes in the form of a 1x2. They would do something like sell the October 23, 30 1x2. They sell the October 23 calls, they buy 2 of the 30 calls. That way they protect themselves if we go back to that volatility environment. Perhaps they make some yield as those at the money options decay. The VIX options will have an elevated value and elevated volatility themselves when we see volatility pop up, and they're taking advantage of the fact that the VIX is both going lower and volatility in VIX options is also going lower. An additional trade we saw today is in the VIX weekly options. There's a big seller of the October 9th 24 calls. They sold those at 65 cents, roughly about 12,000 times. And that is, again, indicative of what we're looking at with a lower volatility environment. Now, if we have a big sell-off, you would see that change a little bit. Usually, almost all options are bid, especially in the front month or two. And that would be a different strategies come out of that market. But now that we've had this sustained rally off of what it looks like positive China news, we're going to see started that order flow that is very typical of that environment, that is selling at the money options and buying those far out of the money calls. That's what's going on in the VIX. This is Mike Palmer with Group 1 Trading. This is Volatility 4-in-1.